Joining us now, though, to discuss more, Stephanie Roth of Wolfe Research and Bloomberg's Michael Ball. Thank you both for joining us, being in studio. Merry Christmas to both of you. Let's just get your reaction, Stephanie, from the initial claims number.
It's the data looks solid. It's telling us the labor market remains fairly well contained. The layoffs are pretty minimal. There was a bounce back in continuing claims. We have to remember that there was volatility around the Thanksgiving holiday. The trend, it seems like, in continuing claims is it's actually starting to tick down over the past couple of weeks, which is a positive sign. Continuing claims are important to watch to gauge to what extent people who are currently unemployed are finding jobs, the job finding rate.
When you look at this data and compare it to what we saw in the latest jobs report, with the unemployment rate actually ticking higher, though, what do you make of all of it, or is it just too noisy?
I wouldn't read into the unemployment rate ticking up in the most recent print. I think there was an amount of the government shutdown that filtered into the data. BLS said that there was an impact from the government shutdown. They can't necessarily quantify exactly how much. I firmly believe that in the next December print, we will see that employment rate ticking down to potentially 4.4, if not at least 4.5.
Michael, what do you make of this?
Yeah, the timing was different too, right? So the reentries from sort of the college kids coming home had a factor. There was this sort of weirder feel to it that made it very questionable, again, with every other data set we've seen from sort of the shutdown. So again, traders are looking through it, waiting for January to get the December data with the hope it's cleaner. But to what you just said, uncertain if we will get that if there's a shutdown. Lots of questions, not a lot of answers.
We've been there before. So, Michael, given all of this, the fact that the labor data is going to be not corrupted but incomplete for a while, do you then look at the market focusing more on things like the weekly jobless claims, which didn't really get as affected by the government shutdown because these are state-compiled numbers?
Yeah, I think the continuing claims is interesting. You did see some of that picked up in other survey data. And also what I'm looking at a lot is now the beige book. The trending there has been much weaker. You have obviously 3 points, growth, inflation, and the labor market there, where you can kind of extract a trend, and all of it's been sort of negative, including the inflation, which has seemed to be stabilized, moved sort of from the forefront in the summer now to something secondary. And instead now guys are talking about lower sales, lower activity, lower investment. And we saw some of that a little bit in the third quarter GDP, where the investment side was much kind of flatter than you would expect. Now there was an inventory drag clearly, and most of the power came from consumption. But my worry is if we move past the AI pulse, the investment CapEx story is much weaker, and some of the PMIs are reflecting that now.
So for those who don't know, the Beige Book compiles anecdotal evidence of what different Fed regions see taking place in their district. Is that based on activity or is it based on sentiment? Because we know the soft surveys tend to show consumers feeling worried, but in the end, they end up spending anyway.
100%. It's sentiment-based for sure. They obviously are, talking about real activity. And the Fed presidents and some of the governors like to say they talk to contacts in their districts or contacts out there. And this is what they're referring to in a lot of ways. But to your point, the shutdown weighed on sentiment. We obviously have seen consumer confidence hasn't really rebounded yet. Business sentiment has been muddling through. If you look at some of the regional Fed PMIs, it can be quite funny when you look at the comments and how frustrated they are with tariffs and with shutdowns.
And of course, it's not just the jobs data that is, left kind of incomplete, Stephanie. We also see inflation, and the latest inflation report was a good example of that, where we're not getting the full picture, and it looks like we're not going to get the full picture for a while.
No, what we're going to see is the inflation data is likely to tick higher in the next couple months, and up until April, when we get the bounce back in terms of rent inflation, given some assumptions that BLS made. So what we'll probably see is an environment where inflation is ticking higher, and I would actually take the other side on the growth, from a growth perspective, and our expectation is that growth is going to start picking up. It's already seems to be inflecting to some extent. The Q3 GDP data were actually pretty decent, and my expectation is in Q1, the narrative around the economy will be somewhat the opposite of what we've seen in the past couple months, where inflation is a little bit elevated and growth is also picking up.